Passive income, raising capital, mindset, and wealth building. These are all things that should be top of mind with investors. And our guest today is an expert on all of these topics and more. And that's what we're going to be talking about today on the Sub2 Deals Show. Hey, deed grabbers, welcome to this episode of the Sub2 Deals Show, where we talk about all things subject to. Now, occasionally we will talk about other investing topics, but it's always something to help you with your real estate investing business. If you're listening to us on Apple or Google or any of the other podcast platforms out there, we'd like to invite you to check out our YouTube channel. You can do that at sub2tv.com. We have the video version of our podcast there. You can see our smiling faces and all the other video content that we put out over there on a fairly regular basis. So you can check that out there. Guys, today we're talking about, a variety of topics, but inflation, how it affects your wealth, passive income. We all talk about passive income, don't we? Now, real estate investing can be passive. It can be a little bit of work too, but we're going to cover some of those things. So today our guest is Bronson Hill. He is the managing member of Bronson Equity. He's a general partner in 2,500 multifamily units worth over $250 million. He's the host of the Mailbox Money Show, where he breaks down the investor mindset, and he has personally raised over $45 million for real estate and his private equity deals. He's the author of the best-selling book, Fire Yourself, Replace Your Working Income with Passive Income in 3 years or less. We like that. And he's a regular contributor to YouTube and his blog. So, Bronson, welcome to the Sub2 Deals Show.
Hey, William, really excited to be here, man. Thanks for the great intro.
Yeah. Hey, we're happy to have you. I'm telling you, talking about somebody that's raised $45 million for real estate, I'm telling you, every investor that I know would love to be able to say that. So, but tell everybody about yourself, and man, how in the heck did you raise that kind of money? How'd you get going?
Yeah. It sounds actually closer to 50 million now. Yeah, it's crazy. I started as a medical sales professional, so I had a great W-2 job. I was making good money, was working hard in the medical field. We wear scrubs and go into surgery and help heart surgeons with their procedures. And one thing I realized in my own life, and as well as others, is that I wanted to have financial freedom, but really not just having enough money, but really having time. And that's the thing, as Americans, and especially like just professionals or in the medical field in general, there was just people don't take vacations. I had a couple of physicians I worked with that made over $2 million a year each, but they work 60 to 80 hours a week every week. And to me, I was like, that doesn't feel like freedom, right? So there's got to be another way. So I learned about real estate, started investing in single family, and then it wasn't getting to my goal as quick as I wanted to. So a lot of people that are kind of buy and hold single family, it's like, maybe these days, maybe $100 a month, maybe a couple $100 a month. You have one tenant that doesn't pay or one issue, and your cash flow is gone for a while. It just didn't really get me to financial freedom. So I learned about this thing called syndication, which is basically raising money and putting it together for larger deals. So our first multifamily deal was 225 units. I raised a little bit of money for that deal from somebody I met at a meetup that I had started in Los Angeles, and then found a partner. We raised about another $15 million together. It was kind of a story of how that happened, but really partnerships have been super helpful. And then I launched my own brand and just started raising for larger real estate deals. The last couple of years, we've shifted to going a lot more to things that cash flow much better. So there's a lot. Cash flow is very difficult in a lot of real estate deals right now. So we're doing a lot of oil and gas, buying private businesses, and just really helping people with cash flow, appreciation, or tax benefits. So that's really what we do. And we just love having conversations around finance.
Yeah, right. I got to tell you, and anybody that listens to me knows that I do this. I keep things pretty simple because I'm a simple guy. So, I started in single family homes. I still do single family homes. My one venture into commercial was I actually bought a building to hold RIA meetings. When I ran a RIA in Georgia, that was just crazy stupid. But You talk about syndication, and I'll tell you, the first person that comes to mind when I hear syndication is, of course, Grant Cardone. But that
Sure.
seems so complex. How can a simple guy that does single family homes, and you said you got started with those, how in the world do you transition over to syndication? Isn't that difficult? I mean, is it something anybody can do?
Yeah, everything is crazy and difficult until you know how to do it. Then you realize it's actually not that difficult. So really, doing deals, it basically involves finding a deal and finding the money. That's really those two things. And so here's an example. So I started this meetup in Los Angeles. I didn't have any multifamily deals. I had 4 single family houses with a partner. And I said, I want to start a multifamily meetup. So I went to a local person who ran a meetup, and I said, hey, how about we start another meetup? I'll do all the work and you just show up and I'll use your brand and we'll do this. And she said, that sounds like a great idea, right? So she's doing things, she just shows up. So we show up and we promoted it a lot. We got the word out, word of mouth, social media, whatever. 60 people were there at the first meeting. And this was like 6 years ago. And a guy comes up to me and says, hey, I'd invest in one of your deals. And I'm looking around like, are you talking to me? Like my deal? I don't have it. But of course the sales background that I had was like, well, let me get coffee with this guy and see what he wants. But I realized he saw somebody, he didn't see an expert. We all think we have to be an expert before we raise money or we do these things. But there's a difference between being a leader and being an expert. A leader, I was at the front of the room as a leader, right? I was asking the dumb questions. I was interviewing the guests. I was helping host people. So people saw me as somebody who's a leader in the space, but I wasn't an expert and they didn't expect me to be an expert. So what I did is I basically got coffee with that guy, said, hey, here's what a sample deal would look like, kind of showed him a sample deal. It wasn't really, it was just kind of like, here's what it would look like. Would be interested? Yeah, I'd be interested in that. So then I connected him with another guy from that same meeting that I'd met who had a deal, was looking for money. He was trying to raise $3 million. I said, well, so I basically just connected to them, right? And so when you're first starting out, the hardest part is just getting the first deal done because people, they knew me as medical sales Bronson, right? They didn't know me as real estate Bronson. They kind of knew me as I was this person that does these things. It's like if I go to my tire, let's say I go get my oil changed. I know this oil change guy for 10 years. I say, hey, Hank, change my oil. And he starts telling me about a real estate deal. If we've never talked about real estate before, that like that's going to be a weird conversation, right? But if you're already known as a real estate person, like a lot of your listeners I'm sure are, by saying, hey, I'm doing this new thing, you just start telling people what you're doing. And then basically it's not that hard. There's paperwork if you have partners. Now, my lack of experience in multifamily, like, how could I buy a 225 unit apartment complex? Well, it wasn't because of my experience, because my partner, the guy I met at that same meetup who had a deal, he had 15 years of experience. He'd exited 5 deals. He had a lot of, so it was the team had the experience, right? So a lot of times with single family, we think, oh, I don't have that experience, or I could never do that. Well, it's like, well, what about a team? Are there somebody else that's doing this that I could bring value to? And a lot of times we don't see the value that we can add. If you can raise money, if you can let people know what you're doing, that's a great value add for a lot of people. So that's how we find investors is just educating and just doing podcasts like this and telling people about, hey, we do these types of projects. So if people are willing to put themselves out there and be of value to others, then people will want to kind of work with you.
Right. And again, with syndication, it seems like, and like I said, you're telling me things right now. I know nothing about how it works. I mean, I hear the words. I've had guests before that do similar things, but as far as really knowing how it all works, I don't. So I'm asking from just like a total newbie would.
Yeah.
Uh, it seems like there's so many rules, there's so many laws. I see people on Facebook all the time most investors in my space, their idea of getting private money is just private investors. And they'll get out on Facebook and they'll post things like, hey, here's an example of what I do. We just rehabbed this property. If you're interested in earning, passive income on the money you have sitting in the bank, contact me, which my understanding is that is against SEC rules. You have to have relationships with people to do things like that. But let's just say that you've got somebody like me. All I've ever done has been single family, and I decide I want to jump into commercial. I want to buy a 250 unit apartment building, and I want to start doing some of the stuff that you do. Well, how do I get started? What are my first steps?
Yeah, it's interesting. Most people think that you can't post, and that, I think what you said is true. There's some limitations to what you can do online and what you can put there. And there's different types of deals. So again, there's I'm going to get a little technical here, but there's something called a 506B, which is just a legal classification that says it's a rule, the 506B rule that says you have to, if you do this type of a deal, you can't advertise the deal, and you can work with non-accredited and accredited investors. Accredited is just you have a certain net worth or you have a certain income. So again, high net worth people, you can work with anybody, low net worth, high net worth, but you just can't advertise it, right? You've got to have a pre-existing relationship with them. The other side of that is called a 506C. So the first one was a B, this one's a C. You can work with only accredited investors, but you can advertise it wherever you want. You just have to verify these people are accredited. You got to verify that they're high net worth enough. So knowing that and even with this, the law, this is the frustrating thing about the law, is that it's not always clear. Some attorneys will say, oh, it's no problem. You can post whatever you want on social media. It's fine, whatever. Other ones will say, hey, if you put stuff on there about what you're doing and rehabs and invest with us, then you're conditioning the market, right? You're actually kind of like putting things out there. I mean, it's my opinion. I'm not an attorney, but we will post that, hey, we're doing this. We finished this project. We just closed on this. Or, hey, we're doing this. You have to be a little careful when you're looking for a specific project. Where I see a violation sometimes in my mind, again, I'm not an attorney, but where someone's like, I have this specific deal. I'm doing this and this specific thing. If you invest, you get these kind of returns, right? So you're putting returns on there, you're putting guarantees. But if you're just like, hey, I'm doing these kind of deals, if you're interested, let me know. You're kind of saying, hey, let's start a relationship and then I can share deals with you. That's generally a more compliant way to do it. And really, why are those rules there? It's because the SEC doesn't, which is the Securities Exchange Commission, who kind of governs all this. They don't want people to be scammed. They don't want people just putting things up online, letting them be like, hey, there's no real oversight. And this is kind of an area that I was what's called an RIA, or registered investment advisor. So for a few years I did this, and now I'm still an RIA. I'm a recovering investment advisor. So I kind of learned like I couldn't really do the Wall Street or some of these alternatives. I had to kind of get, and I had to leave all that to do this now. So I think that the rules are in place to try to protect people, but I do think there's a way you can tell your story. You can be compliant. Obviously, having, once you start getting in, you have partners that kind of help you. There's attorneys that can kind of help you, just to make sure that you're doing things appropriately, so that you're not, putting yourself out there in a way. And I will see them as well. I'll see things on there. It's like, that doesn't really seem like a very compliant way to do it. But, I'm not a governing body, and, I wish them the best. But some people just don't know, right?
Yeah. We had a brief conversation before we started recording here about passive income, and a lot of the stuff that you read, the courses, when you're first getting started as a real estate investor, they'll talk about passive income, and the biggest lie out there is that being a landlord is passive income. I'm telling you, I've done it, and it is far from passive. Now I've transitioned into where I do my exits are all seller finance exits, and it's not 100% passive. You'll occasionally get a house back or have an issue with your borrower, but it's a lot closer than being a landlord. But your investors that invest with you, that is a truly passive investment. Is that right?
Well, my book, Fire Yourself, I talk about this. The quote, kind of the main quote of the book is, unless you learn how to make money while you sleep, you'll work until you die. And so Warren Buffett, he talks about this. So a lot of people think passive income is owning a rental house or 2 or 5, which I, had a number of rental houses. You realize it's a lot of work, an online business. Maybe you have an online trading strategy of stocks or options or things like this. These are not actually passive. I don't know that to be honest, I don't know if there's really any fully passive way to invest, because nobody really cares about your money the way you do. And so, but I do think there are ways that are more passive. And so that's kind of what we do, is we offer people a more passive way. And what I mean by that is there's still work. The work is on the front end, where you're vetting the team. So we do deals. We have partners that do deals. There's other groups like us out there that do this. And just looking at it, saying, well, does the deal make sense? Who are these guys? Have they done this before? What are the risks here? Kind of evaluating all that. If someone's doing background checks, or talking to prior investors, just kind of getting a feel for, actually, what do I see? Kind of how could this work, to basically be able to, I invest and then I don't have to do work from that point. And the name of my podcast is called The Mailbox Money Show, right? So the idea is, hopefully we generate mailbox or direct deposit money that just shows up every month, every quarter, and we didn't have to work for it, right? So I know people that are in 40, 50, 60, 70 deals, which I think is way too many, but some people do it. And how do they do it? Is they basically will do some diligence. They'll invest in every deal, and they'll just start getting the cash flow that comes from that. So I think that there is a way to do it where it's much more passive. But again, it depends on, a lot of times people will say, hey, I do this work in my business. And this is the way you can tell if what you're doing is passive. If I have 3 rental houses, And if I couldn't immediately 10x what I'm doing and go to 30 houses, so if I just, you got 27 more houses and they have 30 houses, even if you're a property manager, could you do that? Well, without being a full-time job. And the answer a lot of times is like, oh my gosh, to do that would be, I couldn't scale up. It would have to buy all these houses right away. I have to manage them, get a property manager. And then you get all these headaches of, even the property manager is letting you know when people don't pay, or the toilet issue, or other things that are happening. So, you just can see that those things aren't as passive. Not everybody wants to be fully passive, but I think the older I get, the more I realize the more passive we can be, the more free we're going to be, right? Because like, what happens, God forbid, I have a health issue, I have, need to take a break. Let's say a family member has an issue they need to be, help with. I could do that because I have enough income covering my living expenses, right? I'm able to take time off and go do that and be with them or support myself. And so those are things that I think a lot of people, it's just a different way of thinking and a different way of really looking at it.
Yeah. I know landlording is definitely not something that I want to do again. In fact, like I said, I've moved over to financing, and it's just really creating notes, and that's what I do. So I like that. Okay. Like I said, it's not truly passive. You'll get a house back occasionally or something like that, but it's a heck of a lot closer than being a landlord. So, uh, if what would be your recommendation for somebody that wanted to get started in real estate investing but didn't want to be a landlord or have any of those headaches or ever worry about getting a house back or anything like that?
Well, yeah, I've had over 2,500 one-on-one calls with investors. Actually, my second book is called Rich Brain. It's how the wealthy change their brain to change their bank account. So it's basically what are the wealth habits. And one thing we've kind of realized is there's kind of two paths, right? If you have money but you don't have time, and that's usually a common where people are professionals, they have a business owner, whatever. Passive investing is awesome because you've already got the money. If you have a net worth, of $1 million, 2 million, 10 million, or you have a really good income, that might be just good to keep doing what you're doing and invest passively and stuff. If somebody is, hey, like for me, I didn't really have, even though I had a good job, I was making good money, I just didn't have a lot of time, but I made time. And I said, well, I'm going to do this and work myself into a deal. And I imagine a lot of people you're working with as well. And what you're doing, it's like, hey, I want to do this kind of thing because I want to generate wealth, right? So there's ways you can do that by leveraging your time. So it really depends kind of what your goals are. I think for someone that, is saying, hey, I want to I want to scale my wealth. You're raising capital is a way to do it, where you get a piece of kind of the upside as things perform. So you get usually a little bit on the front end, then you get a piece kind of along the way on the back end or through the cash flow of the project. There's other people find deals or they find ways to operate them. And then in this, I'm speaking mostly on larger deals, not just real estate, but other types of deals. We've done car washes and ATM machines and buying businesses and venture capital and different things. But for people that are wanting to be more passive, I think it's, just really, giving yourself a goal of in the next 30 to 60 days, I'm going to listen to some podcasts or go online and search out some operators and find out who's doing deals in the space and see, maybe look at a few deal packages and invest in one over the next, 60 days. And that's maybe a good goal to put 50,000 in a deal, and you're going to learn a lot. It'll probably go okay. And, just making sure you do your diligence and, realize that every investment does have risk. So do it with money that, you could potentially, be tied up for a while, or potentially something could happen and, something, once in a while does happen where, not every deal is a home run.
Right. For sure. We all know, I mean, the advantages. I mean, like I said, I don't want to be a landlord, but I know that there are a lot of tax advantages to being a landlord. So what about with syndication or investing this way? I mean, what are the tax implications there?
Yeah, so I think it depends on the project you're doing. So with syndication, that's just the legal structure we use to organize the investment. So you can syndicate just about anything, right? You can syndicate an apartment building, you can syndicate a coffee farm in South America, you can syndicate a business, you can syndicate a construction project. So we've syndicated, we've done a lot of different things in this space. So I think that how it works, it depends on the asset. The best things for tax benefits and for cash flow right now, we found there's a lot of stuff. There's a couple of projects in the oil and gas field we've done recently, because oil and gas, it's interesting. And again, I'm not a tax person, but there's if you invest in drilling, oil drilling itself, intangible drilling costs, it used to be it was a lot more risky and uncertain. They didn't really have the technology. They have just kind of do these vertical drills, and if they miss, sorry, you have a dry hole, and we spent the money and it's gone. But now it's like they can kind of go in with a lot of data, and they have geologists go out and they'll kind of tell with different testing. They can say, oh, we think, we have pretty, high degree of certainty there's oil down here. And if they miss on the way down, well, they can go sideways and they can actually horizontally drill for a mile or two until they hit something. So it's not that they never miss. It's just more common they will hit it. But it's not uncommon though for those deals to have typically around 15 to 25% cash flow per year, which is great. And then they also have a tax benefit, right? So you get actually against ordinary income, which is it's one of the only investments that I know of. I think there's some stuff in the agricultural space as well, but that you can reduce 80 to 85% of the amount invested in year one against active like W-2 or 1099 or business income, right? So a lot of other stuff only is in the passive bucket. Like if I invest in a deal or a real estate deal, I can have gains and losses from different deals and they kind of offset each other. Well, this has a potential. If you're a doctor or a lawyer or a salesperson, a teacher, you can actually offset ordinary income, right? So there's some really unique things there. So cash flow plus tax benefits. Right now with syndication and real estate, there are some tax benefits as well. It's not as generous as it was before. It's not against active income typically. So there's some caveats there, but we've been really looking, even private businesses were much higher, not as much tax benefits, but much higher cash flow, right? So we just try to find things that really provide, cash flow or tax benefits or both, because those are the things that really allow someone to, like my book says, fire yourself. Because if you can't cover your living expenses, a lot of money someday is great, but if you can't cover your expenses, how are you going to live, right? So that's what allows you to actually kind of be able to set yourself up and cover your costs and live a great life.
Right. So Bronson, let me ask you this. I mean, are you still looking for investors, or do people invest with you now?
Yeah, we are. So, we try to find a good fit, people that are, typically, hey, we're looking for cash flow, looking for tax benefits. And like I said, we have different types of deals. Right now it's oil and gas, private businesses, we're doing different things. And so we're always looking for partners that it makes sense to work together. Obviously people's goals have to be aligned, kind of where their expectations. Once in a while we'll get a call if somebody say, I'm looking for 100% return in 12 months. And I'm like, well, we're not the right group, because that's not what we do, right? We try to it's not the stuff, all investment has risk, but we just try to typically go for things that are much more kind of base hits and just continue to move forward. And if we can get on average, depending on the deal, between a 15 and 20% return per year, more or less, we're pretty happy with that.
Right. So what are the requirements to invest with you? I mean, is it, you have to be an accredited investor, or can you take, lesser than that?
Yeah, it depends on the deal. Yeah. So accredited investors, a lot of people think it's like you have to have a gold star or some certification. It's just basically saying you have an income of $200,000 a year as an individual, or $300,000 as a couple if you're married, or so you could be that, or you have a net worth of $1 million outside your primary residence. So if you qualify on either of those, the net income or the net worth, then you're what's called accredited. So some of the non-real estate stuff we do is for accredited only. And again, typically, usually people invest, 50,000, 100,000 is kind of the minimum. So if somebody has a net worth of, 200,000 or 300,000, it's probably not going to fit for their goals anyway. So we try to just make sure it's a good fit for, someone who's got, a $5 million net worth. To put 100,000 into a deal is not the same as somebody who's got a $300,000 net worth putting 100,000, right? It's a very different thing. So we just try to make sure that whatever someone's goals are, that it aligns. And I think anybody that someone works with in the space in passive investing, I just encourage you to ask those questions and just figure out, are they really looking out for you as well? Because every investment, they all sound great in the beginning, but every investment has risks. So making sure you understand it, making sure that if it took longer to get your money, if it took 3 to 5 years or more to get any money out of it, or there was an issue and it didn't work out the way you planned, would you be okay without that money, right? So that's something we just try to make sure we're really trying to do right with investors in that way.
Right. So if someone listening to this was interested, they could contact you at bronsonequity.com.
Yeah, they can reach out. Happy to connect with anybody from your audience that would like to reach out.
Okay, great. So I know that you told me you have an ebook that you're going to share with our audience titled "How to Use Inflation to Your Advantage." So we're going to put a link to that here in the show notes. But Tell me a little bit about that. What does that mean? How do you use inflation to your advantage?
Yeah. So this is the ebook here. It's like 30 pages or so of just a ebook on different ideas on ways you can instead of being just paying at the pump and going to the grocery store and say, oh my gosh, everything's twice as much as they say inflation's 3% or 4%. It's way higher because we're paying way more. So how do you actually take advantage of that? Obviously, owning real estate is one way. Using debt. Even there's some unique strategies around precious metals and borrowing and other things and buying different types of assets that are really it can be really helpful for a lot of people. So there's an easy way to get it. If you text the word inflation, so you just get out your phone, you text the word inflation to the number 33777. You just text the word inflation to 33777. It will ask for your email and it will send that to you. And then you'll hear about our other deals or things that are coming up on our stuff as well. That's probably the best way to reach out and connect with our stuff as well and get that gift.
Okay, awesome. Okay, so again, you can text and get that ebook, and we'll also have the link in the show notes, as well as bronsonequity.com if you guys want to reach out about investing. So great. Okay, well, Bronson, any final thoughts you'd like to share with everyone out here about what you do and how to create passive income?
Yeah, I would say, everything is possible if you see someone do it. A lot of times things can sound too good to be true. And in a lot of cases that is true, but I think in a lot of ways, if you can meet other passive investors, you can do some education, you can read some books. There's a lot of amazing books. My book is one, there's other ones that are out there just to try to learn more about this world of passive investing. It really can be transformative. Actually, I just had a call earlier today with a guy. He just did a testimony. He's like, hey, because we invested in this deal with you, my wife was able to fire herself and leave her job because we had the passive income coming in, right? So that's what everybody wants. We've had a number of stories like that where it's like, wow, somebody who actually was able to do it in the amount of time we said and by following our program, which is great.
Awesome. Fantastic. Well, man, thanks so much for coming on with us and sharing with us great information.
Thanks so much. Appreciate it, William. Thanks.
All right. Thank you. All right. Talk soon. All right, guys, that is it for this episode of the Sub2 Deals Show. Remember, you can contact Bronson at bronsonequity.com if you're interested in investing with him. And we'll also have the link to the ebook he talked about, how to use inflation to your advantage. So hope that helps. Remember, if you're listening to our podcast, check us out on our YouTube channel at sub2tv.com. And if you haven't yet, take a look at my new book, 12 House Blueprint. You can go to 12houseblueprintbook.com if you want to learn how to create notes and not have to deal with tenants or repairs or any of that sort of stuff. So thanks for joining us today, and we'll catch you next time. Get out there, talk to some sellers, and buy some houses.